All right, for this video, I'm going to address the question, are business gifts tax deductible for the business entity? Okay, so we're going to go through the rules. I got a simple fact pattern here in front of us. And I've also got a sample Form 1120S where we'll show how this is reported on the tax return so you can record it appropriately. So are business gifts tax deductible? Short answer is yes, they can be. But there are certain limitations here. So if a business gifts cash or property to an individual or a company, so this could be a client or a prospect or another colleague, whoever it might be, if you make a gift from the business to an entity or a person, the amount of the gift is a deduction for the business up to certain thresholds. So the relevant sections of the Treasury regs we're looking at here are in section 1.274-3A. So if you look up that section, it says that no deduction is allowed under section 162 or 212 for any expense for a gift made by a taxpayer to an individual to the extent the expense exceeds $25. Okay, so what's that mean in kind of layman's terms here? So section 162 is the code section where we look for authority to deduct gifts made in ordinary trade or business, right? And then section 212 is where we look for the authority to deduct expenses made in connection with investment income for individuals. So those are like the itemized deductions that you might have, and then versus 162 is for trade or business deductions. Now it says you can deduct it to the extent the expense does not exceed $25. So what they mean there is if you pay for a gift and you give that to a client, let's say, the amount of the gift that exceeds $25 is a non-deductible expense. So let's look at an example here for an S Corp. So I'm going to run through the example and then we'll go look at the financial statements and the tax return. So we have fake S Corp here, makes a $100 gift to each of 7 of its clients. Okay, so $700 in total gifts were made during the year. The $700 is going to be recorded as an expense on its financial statements. So if we quickly look at the financial statements here for fake S Corp, we can see here they've got their revenue, they've got their expenses, and here's a line item for the gifts to the clients. That's okay, right? So you have $700 of gifts to clients. You can write it off for the business as long as it's appropriate. That's fine. So their net income per books is $2,000 of losses. But what we're going to see here on the return is that of that $700, only a portion is going to be tax deductible. Okay, so for tax purposes, the S Corp must record a book tax adjustment for the non-deductible piece. So how do we calculate that? Well, again, the corporation is going to be allowed to deduct $25 per person, right? So we have $175 of deductible gifts, which is 25 times the 7 persons, and the remaining $525 is a non-deductible expense. So how does this get recorded on the S Corp return? If I go look at the S Corp return, okay, so page 1 is where we report our ordinary trade or business income and expenses. And the gifts are generally reported on line 19 as another deduction. So the gifts are buried in here, line 19. We'd have to look at statement 2. So we can scroll through to statement 2 here to see where we've recorded those gifts. So we've got statement 2 here as this federal supporting statement. And you can see here the third line item down here, we have gifts of $175. So that's the amount of deductible gift that is being included on page 1 here, right? So we deduct 175 to arrive at 980 in line 1, ordinary loss. Okay, so now where else do we need to report this and make some adjustments? Well, the second piece of reporting is going to be on the Schedule K. So remember, the difference of 525 is that non-deductible gifts. So that amount is going to be reported on line 16C. Now on this line item, you might also have non-deductible meals, you might have non-deductible entertainment, travel expenses, maybe fines, penalties, and interest, generally not deductible. So this line item could include a couple of things, but in our case here, it's just the non-deductible gift piece. And then lastly, you're going to see it reported as an M1 adjustment on the Schedule M1. So here's the balance sheet for the company. If we scroll down and we look at M1 and M2 reconciliations, we've got a rec of income or loss per books. So there's our $2,000 loss per books. And here you can see on line 3B, we have an add back for the non-deductible gifts expense for the year, right? That's the $525. Okay, so that's the reporting requirements for an S Corp in this context. Again, the messaging here is, gifts are certainly deductible. If you make gifts to your clients, or if you have other colleagues that you make Christmas gifts to or something like that, they are deductible for the business, but within certain limitations. So you're only allowed $25 per person. Anything over that, the company can still pay for, but you as the owner are not going to be entitled to a tax deduction for those excess amounts. All right, so that covers it. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again soon. Thank you.